Hey everyone, welcome back to Corporate Decoder, the place where we sift through the fine print so you don't have to. Today, we're diving into CNO Financial Group's latest 10K, their annual report. And let me tell you, after reading this, I think I need a financial advisor myself. We're talking billions in assets, shifting strategies, and enough regulations to make your head spin. But don't worry, we'll break it all down. The big story, CNO's trying to navigate a tricky landscape of interest rates, insurance claims, and of course, keeping the government happy. It's a balancing act, and we're going to see just how well they're pulling it off. First, let's get oriented. This 10K is basically CNO's full confession for the past year, covering everything from their business model to potential risks and, of course, the hard numbers. So what does CNO actually do? They're in the insurance game, focusing on health, annuities, and life insurance. What makes them a little different is they specifically target middle-income Americans, those pre-retirees and retirees who might not have access to fancy financial planning. Now for the numbers, people. At the end of 2024, we're looking at nearly $38 billion in total assets and a net income of $404 million. That's a big pie, but it's all about how they slice it up. CNO divides its operations into the consumer and worksite divisions. The consumer division is all about individual consumers, whether that's through agents, online, or over the phone. The worksite division, on the other hand, sells those voluntary benefits you often see offered at your workplace. Looking at where the money comes from, annuities are a huge chunk of their business, bringing in almost $1.8 billion. Health insurance is also big, at over $1.6 billion, and life insurance adds another nearly $1 billion to their total premium collections. Let's zoom in on those annuities. A big part of their annuity business are these things called fixed-indexed annuities. Basically, it's a retirement plan that offers a return linked to a stock market index, like the S&P 500, but with some guarantees to protect your money. On the health side, supplemental health policies are also a popular product. These are those extra insurance plans that pay out cash if you get cancer, have a heart attack, or end up in the hospital. The key thing here is that a significant chunk of these policies comes with return of premium riders, so you get some of your money back if you don't end up using the benefits. Alright, who's managing all this money? That's 4086 Advisors, a CNO subsidiary. They handle about $29 billion in assets, mostly from CNO's own insurance operations. Their game plan is pretty straightforward: stable income, managing risk, and making sure they have enough cash on hand. But it's not all smooth sailing. One major factor is the volatility of the markets. The prices of options, the financial instruments used to manage the risk of fixed-indexed annuities, tend to increase with market volatility. CNO faces some tough competition. They're up against giants with deeper pockets, stronger brands, and higher credit ratings. Plus, the lines between traditional banks and insurance companies are blurring, creating even more competition. And when it comes to selling Medicare supplement policies, the government actually limits their ability to screen applicants based on their health, meaning they can't always pick the healthiest customers, which affects profitability. To manage some of that risk, CNO uses reinsurance, basically insurance for insurance companies. They pass some of their policies onto other companies like Wilton Ray and Jackson National Life Insurance Company. This helps them limit losses, but they're still on the hook if those reinsurers can't pay up. Let's talk about the people behind the numbers. As of the end of 2024, CNO had about 3,500 employees, most of them in the US. They are not a union shop. CNO associates are among our most important resources and focus significant attention on attracting and retaining talented, experienced individuals to serve our customers and manage and support our operations. Now, buckle up for the regulatory portion. Insurance is heavily regulated, and CNO has to play by the rules in every state where they do business. That means everything from financial requirements to what they can say in their ads is under scrutiny. And it doesn't stop there. The National Association of Insurance Commissioners, which is the U.S. standard setting and regulatory support organization, also plays a big role. A key element is the risk management and own risk and solvency assessment, where insurers have to show they're managing their own risks responsibly. Another area to keep an eye on is the regulatory scrutiny of complex investments. Regulators are taking a closer look at things like leveraged loans and collateralized loan obligations, or CLOs, to make sure insurers aren't taking on too much risk. Of course, there's also the federal government to think about. CNO, like all financial institutions, has to comply with things like the USA Patriot Act, which is all about preventing money laundering and terrorism. Privacy and cybersecurity are also big concerns as well, because the company is required to file an annual certification of compliance with the NYDFS regarding our cybersecurity program. With data breaches becoming more and more common, CNO has to be on guard to protect customer information. The NAIC and insurance regulators are also focused on the use of big data techniques, such as the use of AI, machine learning, and automated decision-making. The NAIC is trying to adopt an AI bulletin, which will set forth insurance regulators' expectations as to how insurers should govern the development, acquisition, and use of AI technologies. Finally, it's worth noting that CNO's CEO has certified that the company is playing by the rules of the New York Stock Exchange, and the top executives have signed off on their financial disclosures. Now for the risk section, it reads like a laundry list of potential disasters. Economic downturns, interest rate swings, lawsuits, regulatory changes, even terrorism and climate change. The list goes on. It's basically a reminder that the future is uncertain, especially in the insurance business. One key risk is the possibility that CNO's premium rates aren't high enough to cover their costs. They have to get approval to raise rates, and there's no guarantee they'll get it. Another risk is the financial strength ratings. Those ratings from agencies like AM Best are super important for attracting customers and keeping the business running smoothly. A downgrade could cause real problems. And for something that isn't happening, there are no unresolved comments from the SEC staff. Finally, CNO has a number of important executive officers. For example, we can mention Gary C. Bajwani, 57, is still the chief executive officer of CNO. Karen J. DeToro, 53, is the president worksite division, and Paul H. McDonough, 60, is the chief financial officer. Before wrapping up, let's talk about some of the key financial data points that are scattered in the report that most people care about. As of June 30, 2024, the aggregate market value of the registrant's common equity held by non-affiliates was approximately $2.9 billion. Also, as of February 5, 2025, there were approximately 100,877,837 shares of common stock outstanding. Now, after all that, what's my take on CNO? Here's the deal. CNO is operating in a very competitive industry, serving a specific customer base with a core focus on insurance. While there are numerous challenges, including many outside of their direct control, there are also various levers that they can pull to grow. The company has a strong history, so I believe the business is well run with the right management and controls. What's more important is whether or not they are growing, and whether or not there's a way for them to protect that growth from larger competition, including the effects of a changing economic picture. Overall, CNO is in a strong position to weather storms and continue to deliver value to shareholders. Thanks for watching. If you found this helpful, please like and subscribe.